Michael Burry said sell as Apple, Google dips on double misses. Powell signaled a new bull market just started in this disinflation era. Can you believe it? The stock market has ripped 5% to the upside since Michael Burry tweeted sell. Ever since Wednesday, Burry has left Twitter yet again. Maybe he is right in a couple of weeks. We will find out soon. As for right now, all I can say is the stock market has never been this greedy since over a year now. It looks like dumb money is the ones looking smart right now. Google, Meta, Snap all reported weak ad demand. Apple just reported the first double miss since 2016. So what does that say for the economy? At this point, if you own stocks, you don't time the market in a bull market. How do you define a bull market? Simple. If the S&P 500 is staying above the 200-day moving average, that's likely a bull market. It's been 10 days since the S&P 500 is staying above the 200-day moving average. What did Powell say that totally changed the market? What's the risk that Michael Burry saw that obviously the market didn't care? I will explain it all right after this. And of course, smash the like button. If you want to be my good boy, apply to write your first book with me. Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here, and you know what to do. And push my button if you like what you see in today's video, because I can't push it from this side. This video is brought to you by my Patreon. If you are a good boy, go to patreon.com/magicalgoddesscheryl to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get it into the bookstore. You want it to be real. You want it to be true. You need to be my client, don't you? Fed Chairman Jerome Powell didn't fight back against the stock market pricing in the prospect of the U.S. central bank softening its interest rate policy later this year. According to Jeffrey Gundlach, the so-called bond king said Powell exuded an air of confidence about his fight against inflation in his speech on Wednesday, bolstering investor optimism that the Fed could soon cut interest rates. There was something about his demeanor. He just seems like he has confidence. He feels comfortable in where he's gotten to. And I think everybody kind of sensed that. And he obviously did not fight back against market pricing, Gundlach said. Weird how he, at the same time, had his aura of relaxation. And yet he did not talk tough, Gundlach said. But for some reason, the mood trumped, and that rhetoric just didn't seem to have the teeth or the intensity that he had last fall. U.S. stocks initially fell on Powell's latest policy move of a 25 basis point rate hike, only to rebound on his encouraging comments about the central bank's efforts to contain inflation. The latest gains add to a strong month for U.S. stocks in January, with cooling inflation easing investors as oil price dips at the same time. The Fed has been persistent in its battle against consumer price pressures, raising the benchmark interest rate from near zero levels to the current range between 4.5% to 4.75%. That has proved successful in cooling inflation, with latest readings coming in at 6.5%, the lowest in over a year. I didn't hear the word pain at all, Gunlock said, referring to Powell's latest comments on markets and the economy. He knows that the CPI is coming down, and he is using the word disinflation, he added. Meanwhile, Gunlock noted that Treasury inflation-protected securities, TIPS, have stopped rising. TIPS are bonds that take the effect of inflation into account. They've stopped going up, and I have a feeling that real yields are going to not go up in the first part of this year. So that keeps a little bit of runway, I think, Gunlock said. However, inflation might come back in the second half of the year because of this market melt-up. But that's still months away. That's why the bull run. After a terrible 2022, the stock market has waltzed into this year in a surprisingly merry mood, seemingly downplaying the gloom and doom economic predictions from Wall Street. After it's all down to one thing: the rising conviction that the worst is over on the uncertainty over inflation and interest rates. A gauge of future volatility in the U.S. bond market has become the catch-all metric for traders across asset classes to track interest rate turbulence. And it is now showing an increasingly reassuring trend, underpinning the optimism in the stock market. The ICE BOVA Move Index is extending a sharp slide that started in October and has now fallen to lows last seen in March, when the Federal Reserve started its most aggressive interest rate increases since the 1980s. It continued to fall after the FOMC. Stocks get a boost from falling bond volatility. The chart shows how the trajectory of the S&P 500 index of U.S. stocks has been an almost perfect inverse image of that of the MOVE index over the past year, up to this week's moves illustrating the stock market's heightened sensitivity to the interest rate outlook. The S&P index is up almost 8% in 2023, after rising 5.9% last month, in the best start to a year since 2019. As cooling inflation stoked expectations that an end is in sight to rate increases in the U.S. The Golden Cross is signaling bullish stock market behavior. S&P 500 charts are now witnessing an uncommon pattern known as the Golden Cross, where the short-term moving average crosses above a long-term one. That's widely considered a bullish indicator. That's despite many financial institutions and market experts warning in recent months of an impending recession and more equity market pain. Some of the top U.S. banks, including Bank of America and Morgan Stanley, have predicted that stocks could plunge more than 20% this year. Anything can happen in the market We could easily fall from disinflation to deflation in the second half if liquidity ran out. Or we can go back to inflation like Bond King said. And CPI going back from 3% to 4% again in the summertime. Notably, in Wednesday's FOMC, Powell cited the word disinflation 13 times in the press conference. This is a major change in language and tone and shows that the Fed is now officially recognizing the growing disinflation forces underway. U.S. stocks have seen sustained rallies following past instances of the Golden Cross pattern. Notably in 2020, 2019, and 2016. The steadily falling level of U.S. inflation, still firm jobs market data, China's move to reopen its economy, and signs of easing energy market stress have all contributed significantly to the improvement in investor sentiment in recent weeks. Whatever happens in China is unpredictable. In my opinion, this recent boost of liquidity could be coming from China, as a lot of wealthy Chinese probably decided to leave China after being locked down for so long as they move their money out through Bitcoin. That's why we saw the Bitcoin prices run up before the stock market. Disinflation is the code word for risk off for tech stocks. NASDAQ needs to keep up with the Dow and expects CPI keep on dropping to 4%. In the meantime, from the Apple and Google missing earnings and sales, it already showing demand is weakened. If financial conditions keep on loosening though, inflation may come back. And this time the Fed will need to raise rates to at least 9% to kill inflation. Like Michael Burry said in 2022, maybe that's why he said sell. This is my client's collaboration book. Such amazing authors, such an incredible book. It's called It's Already Yours, Adversity Equals Success. Order your copy for Valentine's Day. And my book, Rainbow Focus. You are such a good boy for watching my video right till the end. Bye.